Fixed income now actually is paying you to be in fixed income, and we're liking investment grade fixed income. We're liking even some of the high yield. Private credit's been a great area, so like fixed income. And then on the equity side, I'd say a little bit more conservative. Good cash flowing companies that are paying dividends.
I mean, on fixed income, we know that the market in the US is expecting up to 2 more hikes from the Fed. Are your funds positioned for the potential pivot there in the rate cycle, and when might you expect that?
So to be honest, we have about 5 fixed income managers, and so they have slightly different views. But I can tell you, I think at this point, I think the Fed pauses. I think the market is overzealous about a rate cut this year. I don't think we're going to have a rate cut this year. I think you can see the market being a little bit confused because while it's built in for rate hikes, on the other side, high yield has narrowing spreads, which is usually an indication that people think you're not going to have a bunch more rate hikes and that you'll have a pretty resilient economy with low defaults.
What opportunities are you seeing now that we're seeing return to volatility in the market? What investment decisions are you making around that?
Well, I think volatility is fertile ground for active managers. So we love volatility because it gives us opportunities in the market. And so, it's been a decade of central banks basically printing money, and momentum markets are tough for active managers. Now, choice and selection really matters.
Are there any particular sectors that you're looking to choose or select?
It's interesting. I always say it's better to swim with the current. And so, if you look at a couple of things in the case, like in Europe, right? What are they looking at? They're looking at energy security, food security, actually increased military spending, which you've never seen in Europe. In the case of, post-COVID, from a supply chain, we're seeing a couple of different things. We're seeing China plus one, right? So people still need China in their supply chain, but they realize they need to diversify. We're also seeing friendshoring. So this divide between kind of the U.S. and China is creating an environment where certain investments are being made because people align with a particular one side or the other. So, for example, a Taiwanese company investing $5 billion in Japan to build a chip manufacturing. That's not because Japan's cheap. It's because it's under the sort of U.S. defense umbrella. And then nearshoring. People are liking being able from a supply side to be able, so Mexico, for example, in the U.S. So any kind of near opportunities to develop that supply chain, I think, are having benefits.
If we can talk now about the R word, recession is in the narrative, and the yield curve inversion, as we know, is putting added pressure on the already stressed banking system following the collapse of SVB and Signature, but it also does point to a recession for some people. Are you expecting a recession, and if so, how do you recession-proof your funds?
So I think the question is whether there's a recession or not, less worried about. It's more about whether it's a deep recession, because that's when it really gets painful. So it's quite likely that we'll have a mild recession, but we still have unemployment, for example, in the U.S. is as low as it's been. The last time it was this low, other than January, was 1969. So, there's definitely, and the consumer is still spending. So I think we're going to tend to have a pretty soft landing with this, rate increase cycle.
If I can just finish off with the move from the Reserve Bank of New Zealand today, it's hiked rates. The Reserve Bank is poised to do that again down the track at some time potentially. What do you see as the opportunities here for Australian investors given the current environment?
Well, I think, similar to the U.S., I do think that we're seeing that fixed income is now finally paying. And so, again, looking for, I'd still remain somewhat conservative because there probably is going to be a mild recession. So, good investment grade fixed income products, and, I think are paying you terrific, terrific returns.
Jenny Johnson, great speaking with you. Thanks for your time.
Thank you.